Tempo is a brand new investing app available in New Zealand, and we are very excited to be telling you about how it works and how you can use it. But just firstly, to let you know, in 2023, they conducted a survey with 1,000 Kiwis, and they found that 27% of people who they spoke to didn't know where to start when it came to investing. We're probably guessing quite a few of those people are maybe listening to this podcast, so keep listening.
So the great thing about Tempo is that their goal is to take the guesswork out of investing. When you sign up, they ask you some pretty simple questions, including how you feel about the idea of your investments going up and down, because some do more than others. You tell them how much you want to save, and then they recommend a mix of their funds for you. It's called guided investing. You're getting investment advice from the experts. How cool is that?
Yes, it's so cool. And also because they track your goal progress, they're also able to recommend changes to your investment mix over time, which is so great. If you're a member of our investing club, we've got an amazing offer. So if you join Tempo, you'll get $10 kickstart into your account. If you would like to learn more about how you can get that, anything you need to know about the investing club or Tempo, you can find that in the link of our podcast show notes.
Let's make your investing journey as exciting as it should be.
And just a quick little testimonial from someone in our community who is using Tempo at the moment. Wow, I just joined Tempo thanks to the recommendation from The Curve, and I'm loving the layout. The breakdowns are exactly how I want my investments to be laid out for me. Isn't that cute?
Some fine print for our lovely listeners. This offer is only for New Zealand residents, and terms and conditions apply. So investing with Tempo means you'll invest in Foresight Bar funds and receive financial advice from Tempo. For more information, including the required disclosures for Tempo, head to the link in the show notes of this podcast. So if I need your advice for something.
I love giving advice.
So I'm going on this holiday to Japan with my family.
Mm-hmm.
So it's me, my mum, my dad, my sister. And we haven't done a family holiday like this since we were like school, uni, like a long time. Usually we'd have partners, or like it would just be me and my sister, or anyway. I just wanted to get your advice of, like, my parents suggested the trip, right?
Yeah. Did they? I thought you and your
dad suggested it, and I was like, great idea. Mm-hmm. But, it's going to be an expensive trip because ski trips are expensive.
Yeah.
So I said I'll have to think about it. Then I came back and I was like, you know what? Quite an amazing opportunity. I'd say yes to friends, for a holiday in Europe. So I should be able to say yes to my dad. Then my sister was like, I want to come. And then now my mum wants to come. So we're going on this very, very cute family foursome holiday. But it's been interesting because it's like, who pays for what?
Yeah, it's a really good one.
Because like back in the day, me and my sister were always like in the shitty fold out bed in the lounge because we weren't paying for the accommodation, which is fair enough. And this time round, this is our holiday as well. And we've been like, no, we want our own room, or we want this level of comfort. But I don't know, when you go out for dinner, who pays? Like,
Have you talked about it at all? With your sister?
Well, like mum and dad, like they're on a pension. Like I would feel guilty then paying for a holiday for me and my sister. And also we're adults now. But at what point does that tick over? Do you know what I mean?
I feel like, have you made yourself do you know how much you can spend on the trip? Or like, have you given yourself a rough amount?
A little bit, yeah. Yeah, it's actually my job this weekend is to be like, right, okay, if this is how much ski passes are, we're planning to ski, 7 days, like all of that, and then giving budgets. But I think it would almost be easier if the partners were there, because it's like, okay, well, you've got your two, you each pay.
Yeah.
But when now they're not, it's like, well, are we kids again?
Yeah.
So weird.
Also, can I just say, before we get into the financials of this debacle, I reckon be prepared for a few blow-ups that make you feel like you're 12 again. When you're in the dynamic of your family, like beyond, like I think what partners does is it cushions the like acting like a child.
Yeah,
do you know what I mean?
You almost have to be like on.
Yeah. There's an element of everyone having to be normal, nice adults. Yeah. And I'm going to not make any of these family politics ruin my partner's time. However, when they're gone, it can be a bit of a free-for-all,
I remember we went on a bike riding holiday over Christmas, and we're doing the Queen Charlotte, which is a beautiful track in New Zealand, and it was me, mum, dad and Sarah, and we got to one part of the accommodation and we turned up, and I vividly remember me and my sister going, well, where are we sleeping? And mum and dad were like, Oh, we the accommodation was booked out, but we emailed the lady and she said she had some spare beds out the back. And we were like, out the back? What do you mean? And we went and it was like in the laundry, there was like, honestly, it was a stretcher and we lost it. Like this, I know this sounds privileged.
How old were you?
We were probably, I think it was like 7th form or no, it would have been earlier than that. Yeah.
But teenagers.
Teenagers, yeah. And we lost it. I was like, we're not 12, Mum. Like, why do you think that we can? Anyway, it pretty much ruined the family holiday. And we said from then on, you know, if we're going, we want to almost have a say in, I don't know, but it's if you're not paying, I totally get it.
Yeah, if you're not paying, I get it too.
Yeah.
But the difference is that you're 36 and you were probably 16.
Yeah.
Right? So it's 20 years on. So we've evolved from camp stretchers. Like it's very clear that you and your sister are not going to be in the shit parts of the accommodation, right? Or has that not even been talked about?
Well, no, and then on the there was the flip side. And Mum, my dad and my sister were like, oh, well, what about this hotel? And the whole group chat was like, yep, cool. And it was really expensive. And I was like, look, I can't really afford that. But I'm happy just to stay around the corner.
So awkward.
I know. And then I was like, oh, well, I don't want you guys to have to say something shit because I can't afford, I don't know. And it was just so, it's such a dynamic.
Okay, what I would say here is the expectation if we're sharing links of accommodation is that it's split full way. That's the vibe it's giving already. Yeah. Because otherwise your parents would be booking it and just being like, this is where we're staying.
But it's more dinners and that kind of thing where it gets a bit awkward.
Why don't you suggest
a splitwise, a family splitwise?
That
or a joint account or something.
That or a joint account where you decide this is like how much I can spend so that you can budget and put parameters in place around what is realistic for you. Say it's $5,000 or whatever. Be like, I can only spend this amount.
Yeah.
Is everyone open to putting that amount into an account that we can use for dinners and blah, blah, blah? That's maybe a good, easy, and then you have parameters around what you're spending.
Yeah.
And everyone's aware of the limit.
That's a great idea. It's just so interesting when it switches from being a kid to being an adult and going on holiday with your family. And also like now I really want to lean into like the 12-year-old, like, help poor me.
I know. I have to be honest and say I'm not in a financial position to be super, super generous with my parents right now.
Yeah.
You know, like I am wholeheartedly leaning into the fact that right now I don't have to pay rent.
Yeah.
I'm contributing to groceries at home and I'm filling the car up with petrol and I'm like, you know, I'm not expecting them to fund my life. But I'm really not going over and above to be like, because I can't afford to.
Yeah.
But I know what you mean. It's real awkward.
It's also, I've really noticed, like I'm saying with my sister and then now I'm saying with my parents, and I've really noticed, I've tried to really focus on the things that would help them that are non-monetary, if that makes sense.
Like
so
planning?
Like,
or?
yeah, no, like my sister hates mess. So I'm like, right, that's one thing I can do is like make sure.
You're doing like chores for like pocket money is what's happening. But
like instead of like grocery shop, like should be like cool thanks.
Oh, because you're staying with your sister right now.
Yeah, it's like, okay, how can I lean in without having to buy them things and go over the top? Do you know what I mean? Because I'm not paying rent either. So it's like, how do I do things? I'm like, oh, babysit whenever you want, you know, like all that. Like, how do I kind of use my skills in a non-monetary way to benefit someone? That would actually mean a lot rather than buying groceries. It's like actually coming home and having a clean house.
I know, but I don't have the time to clean the house.
I know.
I don't even have time to clean the room I'm staying in. I know that's such a stupid excuse, but I mean, this weekend I've literally been like, oh
my God, I remember when you were staying at mine and you were like, I was on the phone to you for some reason. You're like, just don't go in my room. Don't go in my room. And I was like, why? I just said, don't go in my room. Don't go in my room. Honestly went into your room. I was like, geez, wow.
Okay, in my defense, I'm all or nothing, right? I'm either like, there's a time and place you should absolutely not be stepping into my bedroom, but there's also like I'm just so extreme. I'm either everything is meticulous or you walk in and it's not a place to be spending quality time, let's just say.
Yeah. I don't even think that I could open the door. I think it was.
Oh, come on. You're so dramatic. People must think that I'm just like, I only ever talk to you when there's a podcast microphone on. I only ever like.
No, there was a pillow in front of your mirror as well.
Was there?
With a little thing next to it, which I was like,
Oh, that was when I was doing my.
And I was like, what should? Oh, you know, like such a grandma. Why is that? Oh no. Yeah.
This is when I was doing my sexuality coaching. Remember?
Yeah.
And he was like, yeah, it was a whole thing. I must say that was probably, I have been thinking recently, I should be getting back to that. It's amazing how much and I don't mean just sex, I mean just like sexual energy is like creativity and like vitality. And I saw this, a friend of mine, the one who I used to do like sexuality coaching with.
Yeah.
Her name's Melissa Vranges, for anyone that's interested. And she put this post up the other day and it was like a meme being like, me waiting for my libido to return, like someone just lying in the bed, like yawning. And then it was like me being aware of like how I can control my libido or whatever. And it was like her in her like sexy leotard doing like breathing exercises in front of the mirror. And I was like, it's true.
Yeah.
Because I felt the difference between like yawn central and like more activated. Anyway, let's move on to financial chat. This really took a turn for the sexy, which was not planned.
So not like us. Speaking of sexy, Warren Buffett.
Mm-hmm.
That was the worst segue
It was the worst segue. Yeah. He's 95. But
anyway, speaking of sexy, his annual report was out in the weekend.
Oh, sexy.
Ooh.
Tell me more.
No, but honestly, the number of people in the finance industry, let's caveat that this is quite hotly anticipated. Like, this is Warren Buffett talking to investors annually. He's got a full shareholder letter, and it just really gives a good insight into his view of the market and also his business, Berkshire Hathaway. And so this is his 60th anniversary of taking over Berkshire Hathaway in 1965. So he's been doing it for 60 years.
Nah, he is the OG. Yeah. He is the absolute.
Like, we're 4 years into the curve. We're like, oh.
He's 60.
Imagine.
I can't even imagine being 60, let alone having done something for 6 years.
Imagine us. I'd be 96 sitting here.
Honestly, it's something pretty incredible to be proud of. Like, there's not a lot that you stick to for more than even 10 years, let alone 60.
Yeah. Anyway, he is 95 this year. And the fact that he's still got his brain working and his smarts and
it's honestly probably why he's 95 because I really think the more you use your brain, the later in life
he drinks a lot of Coca-Cola and eats a lot of peanut brittle. So I'm surprised.
How do you know that?
Because I went to his
annual general meeting.
Yes. The pilgrimage of the finance nerds.
I totally get it now. Yeah. When you told me about that, I remember being like boring. And now I just think I wish I could go.
Yeah.
I'd totally geek out.
Yeah. Anyway, his right-hand man, Charlie Munger, died last year. Poor Warren, poor Charlie. But anyway, this year's annual report, I think the glaringly highlighted thing is that how much cash his company is sitting on. Like, why are you not spending that money? It's got record highs of how much cash they're holding in their business, which is $334 billion.
It's quite a lot.
Yeah, you're investing in a company and they've just got it in cash. It's like, why aren't you investing that? Do you know what I mean?
He does that a lot though, right? Where he like does giant investments opposed to small ones here and there. If he invests absolutely not by halves.
Yes.
So is there a chance that he's just weighing up his next massive investment?
Yeah, exactly. But it's like, why is he not investing now? Because he obviously doesn't see any opportunities. So that to me says, oh, well, the market is way too high where it is for Warren Buffett. He must be waiting in the sidelines for opportunities to present themselves. So,
but he's not, does he time the market? Is that his thing?
He doesn't time the market as such. He just waits for companies to become great value. So that might be Nvidia's share price just bobbing around where it is now for another few years, then he'll buy. Do you know what I mean? It's not that Apple having a big correction in their share price, then he jumps in. It's more, or he'll slowly start putting some of that money to work. But the other thing that was highlighted was who's going to take over from him. He's 95 years old, and it's always been like, who's going to take over? Is it going to be able to be run the same? And they've got this guy called Greg Abel, who's actually 62. I'm like, can we get someone a bit younger?
Oh, but if he's thinking of, if it's a lifelong career decision, just like it has been for Warren Buffett, surely he's got 30 years in him, you know?
I don't. You just want some young blood, wouldn't you?
I don't know. I'm kind of
with probably no investing experience would probably not be the best.
Yeah, I guess
his son Howard Buffett is chair of the board. Yeah,
Howard.
But anyway, so Berkshire Hathaway, the actual company, has done. Shares are up 11% this year.
Do you invest in Berkshire Hathaway?
No, I don't.
But you love him. Why?
I know. It doesn't really excite me. I don't know. Like, it invests in like energy companies, railroads, insurance. Like, it's real old world stuff.
You're into that kind of stuff.
I mean, to be honest, it's always usually the boring companies that tend to do well, and that's Warren Buffett's philosophy. But he bought Apple. He bought a big stake in Apple.
So innovative.
Innovative. Well, he said he'd never buy technology companies because he doesn't understand technology.
To be fair, 11% isn't, it's good, but when the market's done incredibly well.
Well, that's for the first 2 months of the year.
Is that above the market though?
Market's done 1%.
Is it?
Yeah.
Oh my God, do you know what I forgot to tell you? This is devastating. In fact, this is railroad, so I'll talk about it at the end.
I want to know now.
No, it's bad. It's real bad. Continue. We'll talk about it at the end. What else are we taking from this report?
Sorry,
what are
I
some
was
of the
just
key
going
things?
into what you could be telling me. The key thing is also that Berkshire Hathaway, because the size of the company, has paid $27 billion in taxes in the US, which is roughly 5% of total taxes paid by US companies last year. Like, that's just size of it. So of all the companies in the US, Berkshire Hathaway has paid 5%
of all
taxes in the US.
How many people are employed in that company? It must be enormous.
Yeah, I'm not sure. But
wow,
$27 billion in taxes alone. That's just I'd be doing everything I could to avoid that.
I think the bigger the numbers get, the more hard it is to quantify. Because even looking at house prices, for example, if you're looking at what a return might be over a 10-year period, and you're talking about 10% of whatever it is, I don't know. I find it hard to contextualize amount. So for them, even though that's an absurd amount of money.
Well, just imagine if you could shave $1 billion off that and only pay $26 billion in taxes. Like, imagine how you could allocate that resource to the rest of the company.
Yeah, true.
But, there's 3 certain things in life: death, taxes, and market fluctuations.
Do you think that from this we should be cautious of investing in the stock market? Is that what kind of you're trying to allude to?
I think my takeaway is yes. Yeah, I think we've had a number of really, really great years, and one of the most famous, well-trodden investors is not investing in stuff at the moment. I mean, he's already got investments, so it's not like he's pulling his money out, but he's just sitting on his hands, waiting.
I think it's interesting hearing that, because whilst I agree, remembering for people who are listening to this podcast, they don't have billions and billions to invest. And there's still really great opportunities. Like, even we were speaking in the investing club looking at Tesla shares and how much they've fallen. If someone wanted to invest in Tesla, they didn't want to be a part of the, Elon Musk boycotting.
Yeah.
There's opportunities. It's just that remembering that Warren Buffett is investing a huge amount. So if the market is super high for him, the amount that he could be like saving or making by holding off until things do you know what I mean?
Yeah.
Like, I think it's just remembering people aren't investing the same amount as Warren Buffett. So
no.
And what we don't want is people to feel scared about any kind of investment.
It's just a good barometer though. Like, when things do tend to do well year after year after year, people get excited and they forget that markets do go up and down. And so it's just not forgetting that part and parcel of investing is that the market goes up and the market goes down. Also, you could invest in Berkshire Hathaway. It's a pretty diversified investment itself. Like, in there, you've got Apple, you've got American Express, you've got Bank of America, you've got Coca-Cola, you've got lots of insurance companies. Like, there's a lot of companies within that you could just invest in that and get instant diversification if you wanted as well. But also, in other news, Nvidia has had a result.
Oh, don't tell me. I'm going to log in and see how my shares have done. Can you give me 1 second? Oh, no.
You've lost money.
Oh, no.
You didn't buy it?
No, I did.
Oh.
It's gone down.
Yeah. It's been going down all year.
Oh, no. I thought I'd bought in a really good time. It's gone up and now it's gone down again.
Over what space, Sophie?
Yeah. Oh, I'm looking at 1 year. Hold on, let me look at 1 month. Oh, okay. So it's a similar price to when I bought it.
Yeah.
I haven't lost heaps.
That's good.
But
Long-term game, long-term
Totally.
gain.
I mean, no. I'm still happy I've done it. I hadn't even really seen what it had done. And it's really has not been doing well.
Yeah. So it had a result. Well, obviously with a company that's done, 70% return in the last 12 months and one of the best performing stocks in the S&P 500 last year, your expectations are so high of what this company needs to grow by and what its profit needs to be to keep up with that growth. And so, it had a really good result and it did beat expectations that the market was expecting, but the share price hasn't done much because people are like, cool, well, with the share price as well as it had done, we wanted you to shoot the lights out and you didn't. So, but it's still good news. I guess the key focus, so it generated 131 billion in revenue last year. That's more than double what it did the year before. 130 billion. Anyway, the biggest focus. So when a company reports results, first thing you want to check is it better or worse than expectations? And you can find out what the market was expecting on Yahoo Finance. You can look up, what do people think revenue is going to be? What do people think profit was going to be? But the other key thing is that after every financial result, the company holds a call with investors. You can join. Anyone can join. You jump on. You can
Anyone?
Yep.
So I could have joined.
Yep, you can join.
Oh, maybe I should just for a bit of market research, understand the lay of the land.
You can jump on to Meta's and you can hear Mark Zuckerberg talk.
Well, that's quite cool.
You can jump on, Anyway, so I can imagine this is probably one of the most listened to earnings calls. And most of the focus was around DeepSeek and what impact is that having on your business or going to have on your business. And the CFO, she said that the next generation of AI algorithms could need millions of times the current amount of computing capacity. So
energy needs, you need more energy.
Also, they're going to need our chips essentially. So they're going to need millions of times the current amount of capacity. So our chips are pretty much the best in class and they're going to need our capacity. They're going to need our chips. And so I think that kind of eased people's concerns a little bit.
But why then has the share price not done well?
Because
if I'm looking at, and I know this is short term, but if I look at the graph, even a year, I mean, it's not doing amazing, it's not doing terribly, but it's definitely. Because
you've run out, even that comment, you expect it. You're expecting it has to generate such high growth now because expectations are baked into the share price. Does that make sense? It's like the share price has done so well that you need now profit to not only increase 100%, you need 200%. Do you know what I mean? You need that pace of growth to keep accelerating to keep up with that.
But if what they're saying is true and that AI is demanding that much, shouldn't they be able to do that?
That's the question. If you think the answer is yes, you buy the stock.
Good to know.
If you think the answer
what are
is
your
no,
thoughts? Or should we take that into the investing club? Maybe that's an investing club chat.
Yeah, I think
what's she going to say? Join the investing club. Plug. So good.
So, a bit of an update on Netflix. Who would you say is Netflix's biggest competitor? Just optically.
Disney.
Yeah. But it's actually increasingly becoming YouTube.
Really?
Yeah. So, these two platforms have almost gone in opposite directions. Netflix was ad free and they kind of said, I know their CEO was always like, we're going to be ad free. That was the whole
Netflix
preface of Netflix was you're going to pay per view, there's going to be no ads. And now they're kind of pivoting back to being look, okay, we're going to have different tiers. We'll have a premium one, which is no ads. We'll have an ad one. We'll have different options. On the other side, you've got YouTube, which has been reliant on ads. You always had ads on your YouTube. And now they're going, hey, you can actually get a premium, which is ad free. So it's interesting. They both started with
the opposite.
And now they're kind of merging into each other's territory.
But YouTube's for yes, there's long form, but it's way more user generated content than Netflix. Netflix is very refined and it's high end drama. YouTube is not that. So I don't see how they're the like closest competitors.
Yeah. So YouTube's going to release a ad-free subscription called Premium Lite, which you can subscribe to for $14 a month.
But what is that?
No ads.
Yeah, but like how does that compete with Netflix when the content's so different?
Yeah. Well, in terms of revenue, last year YouTube pulled in $36 billion from ads alone, and Netflix entire revenue was like $39 billion. So they're pretty neck and neck.
But that doesn't surprise me in the sense that YouTube isn't having to put a huge amount of money back into its content production. Netflix
is. Exactly. So the margins, like the cost to generate that $39 million for Netflix would be way higher.
So high.
Than YouTube, 100%. But
does that mean they're competitors, or is that just like an interesting stat around the amount of revenue from online visual content? Because I really don't see them as direct competitors.
Well, you're competing for eyeballs. You know, if I'm going to spend half an hour or an hour on YouTube, that's time I could be spending on Netflix.
Okay, that's interesting.
Yeah, so yes, it's different. You consume different content on different things, but at the end of the day, you could throw Instagram and Meta in there as well and be like, you could throw on TikTok. You know, everyone's competing for people's eyeballs.
And time, right?
Yeah. But a few weeks ago, YouTube hit another milestone saying that people now watch YouTube more on TV than on phones.
I know quite a few people that do that.
Yeah. So if you think about that, people are sitting there in their lounge to watch YouTube, not Netflix or Disney or Amazon.
Interesting.
Yeah.
Oh, that's such an
I feel
insight.
like YouTube's like this underdog.
100% agree.
It's like the Microsoft of the tech companies, you know?
It is.
It's like
the slightly uncool dad.
Yeah. And then it's like, hey, but we're doing all the right things just to like, and then before you know it, we're going to be up here with the rest of them, but you didn't see us coming.
It's so true.
Yeah.
Because actually, if I think about that, YouTube, actually, do you know what's worth doing? We've actually just got our YouTube account. So if anyone would like to put us on the big screen,
you can see our faces,
you can see
our
them.
voices.
Well, actually, but that's a good example, right? Like you can't plug in Spotify or Apple into a TV, but maybe you will be able to.
Yeah. So instead of watching like the new Netflix originals doco, just turn us on.
Apple cider vinegar who?
Yeah. But also, so I find this so, I just think, I can't believe I'm going to say this, but I think Google's becoming my new Microsoft.
Is it?
Well, I mean, I felt a bit uncomfortable saying that, but you know, we're getting there. But also, Google bought YouTube for $1.6 billion in 2006.
What's it worth now?
Well, I just mentioned that it's making about $40 billion in revenue.
Yeah, holy.
Yeah. So it'll be worth multiples more than its revenue. So yeah.
Clever move from Google.
Yeah.
Did you say Google bought YouTube?
Yep. Google
I thought Meta owned YouTube.
Nah.
Oh my God.
Yeah.
So if you wanted to invest in YouTube, you buy Google.
Yeah. But imagine, I was thinking about it back in 2006.
Do you know what it is though? It's like, because Google's cooler acquisition is YouTube, just like Microsoft is being cool in AI.
Yeah.
It's almost like the poster child or the front facing is like the less cool, less innovative. But what they're investing in is,
But it's also like, I was just like, imagine selling your business in 2006 for $1.6 billion. You know, if you started YouTube and you sold it to Google for 1.6, you'd be like, woohoo, yeah. And then seeing it now, you'd be like, shit.
However, 2006 to nearly 2026.
Yeah.
It's nearly 20 years, right? Let's hope you've moved on from your sale of YouTube.
Yeah. And do you know that YouTube actually started as a dating site?
No, it didn't.
Yeah. So people could watch videos of potential partners and then they were like, no, let's go more broad.
Who would ever submit their video? What is the person doing?
Oh my God, you know what I really want to get hold of? And I want
don't even mention it. Don't mention it.
I've mentioned this to so many people recently. It's just come up in conversation.
No, it's so embarrassing.
Oh my God.
I don't get embarrassed very often, but this is truly.
You have dug up stuff of me. We need to. It's for the people. Give it to the people. Give the people what they want.
I honestly reckon
it's so good though.
It's not good. I
remember seeing it and being like, you're a genius. How can you edit the video? So for those of you who don't know what we're talking about, Sophie submitted an entry to Australian Survivor? American Survivor to join their team as a producer. And she had to submit this video and she showed it to me. And I just remember being like, how did you even come up with that? It was so genius.
You are, okay.
I mean, you've probably come a long way, but back then I thought it was fucking awesome.
I've got a selfie stick, a phone, maybe even a GoPro, and I'm hanging off a tree in Manly Beach. It is not good.
Yeah.
It is the most cringe thing. And I remember having to do it so many times because I was so bad at presenting.
But it
worked.
Like,
hi,
I'm got the job.
Sophie. Oh, man.
Anyway, another, and our gorgeous editor, Emily, will absolutely love this, that YouTube has now leapfrogged Spotify to become the most popular podcast platform in the US.
YouTube.
Yeah. It has more than 1 billion views a month. So it's
just
bigger
for podcasts.
For podcasts. Bigger than Spotify for podcasts.
Whoa.
I know, in the US. So
we
that's
need
an indication of the rest of the world.
Focusing our time on YouTube. Exactly. This is making me think.
Yeah. So if you want to go find us on YouTube.
Yeah, actually, gosh. This is really good to know.
Yeah.
That's crazy. Spotify for podcasters has podcasts in the name, and even they're not doing better than YouTube.
Yeah.
This makes me want to invest in Google. I'm totally on board with the fact that Google is the new shining star.
Even though they just removed their DEI policy.
Oh, no, it's like, so
why
true.
Do you have to?
Oh, you're really good at bursting the bubble.
I know. Speaking of bubble that has burst, Tesla's bubble has really, really burst.
Yeah, wow.
Yeah.
The bubble, there's not even bubble juice anymore in the thing
I'm
that
just
you blow
watching
through.
it every day. Down.
I need to look at it.
It's down 4% again today.
Wow.
Yep.
Everyone is boycotting this.
Yeah.
It's so interesting.
I'm nibbling.
You're buying?
Yeah, just nibbling.
How much is nibbling? Little snack?
100. Yeah, a little snack every now and then it goes down.
Wow, it is going down a lot. It's nearly down at its it's like
back to where it was in.
Oh, it's not that long. I'm looking at a year. Hold on. 5 years. Oh, it's still not that low.
No. But if you
2022. It's nearly at 2022.
Yeah, if you were buying stock back in November last year of Tesla, then you should be buying now because it's exactly the same price. But there's been a few things that have happened since then. So it had a result, and that result showed that Tesla sales are down 45% in Europe in January. So that is one of the contributing factors, which we've kind of already alluded to, is that Elon Musk support for Trump, and particularly the far-right parties in Europe.
Do you think that the people that buy Tesla are more educated than the people that are voting for Trump? Like, do you think, because obviously there's a shitload of people in America that have voted for Trump, otherwise he wouldn't have got in. But when it comes to investing, those people probably aren't investing. And so there's people who are like, I don't want that person in power and I can vote with my wallet. And it comes back to it being a privilege to understand investing, right? Like a lot of people are still really uneducated when it comes to how to even invest. How does it work? Blah, blah, blah. Do you think there's a correlation between voters who are Trump supporters aren't involved in investing?
I think it's a combination of the brand is being damaged and people don't want to own Teslas. So there's not these new sales coming in the pipeline that they probably thought they had. There's also a combination of investors going, shit, all of this is going to create brand damage as well. So you've got consumers not buying the cars, you've got investors not buying the stock. And then when you get that compounded, you've got profitability that's not coming through. You've got an electric vehicle market that's growing at like 40%. These guys are going backwards. That means that, Renault and Volkswagen and all those other companies are going to be, they must be gaining market share. And if you think about a car purchase, you don't flip-flop and change your car every week. You kind of get that buyer at one point, well, not one point in their life, but, you hold a car for, I think it's like 3 or 4 years on average. So getting that new customer in, I don't know, it's market cap's now below $1 trillion. So it's still massive, but like that's a bit of a threshold.
But if I look at December, only literally 2 months ago, it was the highest the share price has been in the history of the stock.
Yeah.
So it's not exactly ages ago.
No. Yeah. And that was people going,
I kind of hope it keeps dropping.
Yeah. There'll be a point where people go, okay, this is looking really attractive now, because if you look at all the assets and you look at the profit that it's actually making, it's actually looking really cheap. And so you start to look at the kind of the price and the share price in relation to the earnings growth and all of that. But is this just a short term, okay, there's production issues and therefore there's less cars to sell in Europe and it'll bounce back? Or is this a more systemic thing of people going, actually, we're going to boycott this and we're going to put our money into competitors? That's the kind of question. And part of me thinks it's probably a bit overdone. I think there's, we see with Tesla, like the ramp up towards the end of last year, people getting so excited that like all these policies were going to be positive for Tesla. And now people, markets just are so overreactionary sometimes. And if we want to, we should be taking this to our advantage and buying some.
I mean, it's really interesting in the club hearing what people are saying, because there's a lot of people in our investing club that are like, fuck Elon.
Yeah.
I don't want to have money. I don't want to be supporting the US government. I'm not interested. While I saw a lot of the comments and I was like, God, that makes me proud. We've got an awesome community, and how amazing is that? There is definitely a part of me that's like, it is a buying opportunity. It feels like that.
And then when share prices fall too much, it starts to seed into things like hiring new staff. Because if you're hiring new staff and you're like, look, we'll give you stock, they're like, but your stock's worth like nothing. That becomes really hard. If the brand's tarnished, people don't want to work there, partners don't want to partner with them. That there's so many flow-on effects that come from a falling share price as well. Just lastly, on that, over 230,000 Canadians have signed a petition to revoke Elon Musk's citizenship and passport because they don't want him in Canada anymore.
That's so good.
I know, yeah.
Should I love that?
Yeah. Bitcoin, yes, has tumbled below $90,000 a coin now. It's US dollars. So this is the lowest level it's been since mid-November. So before, Trump's inauguration and all of that and the big ramp up that saw kind of similar reaction to Tesla actually. It's fallen because there is kind of two things going on, and pretty similar to Tesla actually. It's mainly that his confrontational and aggressive stance against his allies. So we just spoke about Canada. He's isolated Canada. He's isolating Mexico. He's isolating China. He's creating all this geopolitical tension. He's siding with Russia. He's creating a lot of kind of economic holy shitness. And it's kind of shaken a lot of investor confidence in Bitcoin as well as in him, all of that. And so, but the other thing, which is really important, is that people are now going, oh shit, I think this whole higher inflation thing is going to come through. And higher inflation typically drives cryptocurrencies lower because it means that higher interest rates are going to come through to help curb that inflation. And therefore, when there's higher interest rates, things like term deposits, people want to invest in those rather than Bitcoin and risky things. So, sorry, that was a really quick explanation. But essentially, people are worried about the world and who Trump is siding with and what that means for uncertainty in the future. And so, yes, unfortunately. But I'm like, you know what? Trump's got his own cryptocurrency. He's got his own listed company on the stock exchange. If he sees the stock market continuing to fall, he sees cryptocurrencies continue to fall, he's going to do something about it.
Totally.
He's self-indulgent and his interests are aligned with us if we're investing in the stock market and Bitcoin. So,
okay, just to finish, the massive faux pas that I had was I needed to take money out of the stock market, and I knew that I needed to take money out of the stock market, and I just sort of like did the whole I'll do it tomorrow. It was 3 weeks later, and the market fell, and I looked at what I would have had if I took it out as soon as I knew that I needed to use that money for something.
Yeah.
And it was like the difference of about $700 that I missed out on because I didn't action that soon enough. And it's a really good example of do not put money in high risky investments if you're going to be needing it in the short term future. It's just like not the right thing to be doing. And I'm like, how many times do we talk about that? The fact that I just didn't prioritize moving the money out of the high risk when I knew I was going to have to use it. I'm just like, Sophie.
Yeah.
Such a good learning.
Yeah.
$700? What the fuck? I'm swearing a lot on this episode, but
it's okay. Let it out.
But anyway, it was just a really good reminder.
Yeah.
Whilst investing is exciting and great and we're 1000% on board with invest.
This is why when you get closer to your goal and actually needing to take that money out, you need to start moving into less spicy things.
Yeah.
Yeah.
I really loved this episode. I feel like there's some stuff happening in the world.
There's lots of stuff.
It's exciting to be a part of it.
There's a lot going on. We'll keep you updated though. Don't worry. We're here for you.
Yes. And if you would like to join the club, we're going to link it in the podcast show notes. There's so much awesome conversation happening in the community at the moment. I'm really here for it. It's, It's kind of like, I think when this stuff happens and when you know what's going on and you've kind of got an opinion or want to see what other people think, it's been really cool to see.
Yeah.
Okay.
See you.
Bye.
Thank you so much for listening to The Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, biz and stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you did hate it, please, don't leave one if you hate it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week and see you next Monday.
Bye.
Bye. Sweet. Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.
No, actually, though. New episodes out every Tuesday. Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.